Are you eager for an adventure into the captivating world of real estate investing? Imagine the rush of uncovering hidden gems, the thrill of watching your wealth blossom, and the sweet taste of financial freedom. Whether you're a seasoned pro or a wide-eyed newcomer, the allure of real estate riches beckons. Let's embark on a journey together, understanding real estate investment basics. Real estate investment encompasses various sectors, including residential, commercial, and industrial properties. Understanding market trends, risks, and rewards is crucial. Investors should delve into factors like supply and demand dynamics, interest rates, economic indicators, and demographic shifts influencing property values. By grasping these fundamentals, investors can make informed decisions and navigate the complexities of the real estate market confidently. Additionally, exploring different investment strategies such as buy and hold, fix and flip, or rental property ownership provides insight into diverse approaches to real estate investment. 2. Setting investment goals and strategies. Define clear investment objectives aligned with your financial goals and risk tolerance. Whether seeking passive income, capital appreciation, or portfolio diversification, setting goals is paramount. Develop a strategic plan outlining steps to achieve these objectives, considering factors such as investment horizon, desired returns, and asset allocation. Incorporating specific, measurable, achievable, relevant, and time-bound SMART goals ensures clarity and accountability in the investment process. Furthermore, conducting a thorough self-assessment to understand personal investment preferences, constraints, and risk appetite aids in crafting a tailored investment strategy. 3. Financing real estate investments. Explore various financing options to fund real estate ventures, such as mortgages, loans, or partnerships. Assessing factors like interest rates, terms, and conditions helps optimize investment returns. Securing suitable financing enables investors to unlock opportunities and leverage capital effectively, maximizing returns on investment properties. 4. Property selection and due diligence. Conduct thorough due diligence to identify promising investment opportunities and mitigate risks. Assess factors like property value, location, market demand, and potential returns. Diligent research helps investors make informed decisions, minimizing risks, and maximizing returns on real estate investments. Furthermore, leveraging technology tools and data analytics platforms facilitates comprehensive property analysis, allowing investors to assess market trends. 5. Rental property management. Effective rental property management is vital for maximizing returns and ensuring positive cash flow. Develop proactive management practices encompassing aspects like tenant screening, rental pricing, and maintenance. Providing quality housing and responsive management enhances tenant satisfaction and rental income, maximizing profitability. Additionally, adopting technology-driven property management solutions streamlines administrative tasks, facilitates communication with tenants, and enhances operational efficiency. 6. Flipping properties for profit. Property flipping presents opportunities to generate quick profits by buying, renovating, and selling properties. Identifying undervalued properties and executing strategic renovations are critical. Careful planning and execution enable investors to capitalize on market opportunities and generate substantial returns. Moreover, conducting a comprehensive market analysis to identify emerging trends, demand patterns, and renovation preferences informs strategic property flipping decisions. Additionally, collaborating with reputable contractors, architects, and design professionals ensures high-quality renovations, maximizing property value appreciation and sale proceeds. 7. Investing in real estate investment trusts, REITs. Real estate investment trusts, REITs, offer a passive investment option for exposure to the real estate market without direct property ownership. 8. Tax considerations and strategies. Real estate investments come with various tax considerations, including property taxes, capital gains taxes, and depreciation deductions. To optimize returns, investors can utilize tax-efficient strategies such as deductions and incentives. Seeking advice from tax professionals ensures personalized tax strategies aligned with investment goals. Moreover, staying informed about tax laws and legislative changes allows investors to adapt strategies proactively. Exploring tax-deferred investment options like 1031 exchanges or opportunity zone investments. 9. Scaling your real estate portfolio. Scaling a real estate portfolio involves strategically using current assets to acquire more properties and broaden investment diversity. Reinvesting rental earnings or utilizing property equity facilitates portfolio expansion. Exploring alternative investment channels, such as real estate crowdfunding, further diversifies and scales the portfolio. Employing financial leverage through strategic borrowing accelerates growth and boosts returns on invested capital. Moreover, implementing a systematic portfolio management approach, which includes regular performance assessments, risk evaluations, and asset allocation adjustments, optimizes growth and resilience. By combining these strategies, investors can effectively scale their real estate portfolios, maximize returns, and navigate market fluctuations with confidence. 10. Real estate crowdfunding and syndication. Real estate crowdfunding and syndication offer avenues for investors to collaborate and pool resources, facilitating participation in large-scale projects managed by experienced sponsors. Prior to investing, it's crucial to assess risks and potential returns by evaluating factors such as project feasibility and the sponsor's track record. Engaging in crowdfunding platforms or syndicated investments provides access to a wide range of real estate opportunities, offering passive income streams and portfolio diversification. To mitigate risks and optimize returns, thorough due diligence on crowdfunding platforms, sponsors, and investment offerings is essential. Furthermore, exploring niche crowdfunding platforms or specialized syndication opportunities allows investors to target specific real estate sectors or asset classes, enhancing portfolio diversification and investment flexibility. 11. Risk management and mitigation. Identifying and managing risks in real estate investing is paramount for success. Implementing strategies like insurance coverage, diversification, and due diligence protects investments from potential pitfalls. Staying abreast of market trends empowers investors to make informed decisions and proactively manage risks. Furthermore, integrating risk management principles, such as asset diversification and contingency planning, bolsters investment resilience and minimizes exposure to adverse market conditions. Additionally, leveraging risk management tools like stress testing and scenario analysis enhances decision-making and effectiveness in mitigating risks. By adopting a comprehensive risk management approach, investors can navigate the uncertainties of the real estate market with confidence and safeguard their investment portfolios. 12. Exit strategies and long-term planning. Planning exit strategies involves considerations such as selling properties or transitioning to long-term rental holdings. Aligning long-term goals like retirement or legacy planning requires continuous evaluation and adjustment of investment strategies. Monitoring market conditions ensures investors can achieve financial objectives and optimize returns. Moreover, incorporating flexibility into exit strategies, such as alternative disposition options or holding period adjustments, accommodates changing market dynamics and investor preferences. Additionally, integrating long-term planning considerations like estate planning, wealth preservation, and succession planning secures generational wealth transfer and legacy continuity.